Hi, everyone. So I want to talk a little bit about how you estimate your estimated taxes. Okay, so if you are an LLC, if you are an LLC with an S-corp status, and if you are a sole proprietor, you will want to make estimated taxes on your business. I think you can also do this as a C-corp. Uh, there is information on the IRS site that makes it look like you could do that. But I'm specifically talking about those three, the methodology. You can use it similarly for a C Corp. But this is how I go about making sure that I've paid in enough taxes. Because what the IRS will do is that if you haven't paid enough in during the year, they will still penalize you even if you like wait till the end of the year and catch up. So what I try to do are quarterly estimated tax payments so that they can have their money. And hopefully I'm not overpaying, but I'll get that back if I have, so this is not exact in any stretch of the imagination. It's just trying to make sure that you stay in compliance with the IRS, not only from a business tax, but from personal tax perspective. Okay. So let's say that you start out in a business and you start out as a sole proprietor. This is how you might want to think about it. Okay. So let's say that you have some clients. They've either sent you 1099s or they haven't, whatever. You're keeping track of all your revenue and your expenses. Okay. Either way, so your clients could send you 1099s, because I work with clients on a continuing basis. So, often that's what they would have done if I had remained a sole proprietor. And, but even if they don't, you keep track of your revenue and expenses because that net bottom line is what you're going to be paying taxes on. So let's assume that in a quarter, you have made a net bottom line net income of $5,000. What I do is, I just take 20% of that. So $1,000 I would pay into the IRS. Okay. Now you could look at your 1040 each year, right? So if you have looked at it, this might sound familiar. If it isn't, you might want to take a look back at your 1040. Your 1040 at the kind of near the top on the first or second page, it's going to tell you what your overall tax rate is. Now, it might not be 20%, might not even be 25%. It might be 13%. It might be 15%. It might be 10%. So you could take whatever that rate is and multiply it by your net income for the quarter. Okay. So it's just a rough estimate, you know, because there's different things in different tax years that are deductible and this and that and the other thing. So, you might pay in a little bit more than you should have. It might be a little bit less, but, hopefully it's in that sweet spot is what we're trying to get at. Okay. Now, as an LLC, similar thing, you look at your bottom line, P&L, your net income for a quarter, and just send it in. Now you could send it in each month, so each month's net income, you could just do that quick calculation and send that money in, however you want to do it, right? I do it quarterly, but I have sometimes done it each month. So as an LLC, you're doing the similar thing because that net income passes through to you as personal income. Okay. So if you've made $5,000 in a quarter, or let's extrapolate that out, $20,000 for the year, then that $20,000 is going to your 1040 as personal income. It's passing through the business to you as income. So similar thing, right? Now, if you're in business with another person, like for instance, I took on a partner a few years back. So we look at that net income piece and we divide it by two because there are two partners, okay? Because in an LLC, with an S-corp status or even as an LLC, if you have two partners, you're splitting that profit or loss between the two of you. Okay. So again, you would take that, divide by 2, that net income, divide by 2 for the quarter, and then multiply that by the tax rate that you're using. Okay. And I never go higher than 20%. I've never run into any problems with that, but that's how you want to think about it. So regardless of the kind of business that you're in, this is something that you want to make note of making these estimated tax payments. All right. Now, where do you do this? Okay. So there is a website called directpay.irs.gov, and that's where you take care of those. And so that's where you would go to read about this, to learn about this from the IRS specifically. And then again, like in some states, you may also have to do this perhaps with state income taxes. I am in Washington State. We don't have an income tax here, so I don't have to think about that. But again, like if people are running into that, oftentimes we can help research that for you, help you figure that out, exactly what you might have to do. But Google is your friend, right? You should do your research about this. Okay. Now, the last thing is on all of this, as you're thinking about what kind of legal form you want to take, and you're making considerations about how you would handle your estimated taxes and all that sort of stuff, start making notations of this in your business plan. Now, you may not share this with anybody, and I'll talk about a business plan a little later on in more detail. But you want to start documenting for yourself what you're going to do, what you think you're going to do, how you're going to do it, etc. Okay? Because you don't want to lose this information. And that's your homework, right? Is that every time you watch one of these videos, listen to the podcast, read something about this, you want to make notes in your business plan and possibly your cash flow template. Okay. All right. Thanks so much. And I'll talk to you soon.